What is good, y'all? It is Decrypt, and today I'm going to show you how to use the fib tool. So a lot of you guys get confused on which fair value gap you're supposed to be trading because you see a fair value gap here, you see a fair value gap there, you see a fair value gap here, you see a fair value gap there. And remember, when you're trading the strategy, you're waiting for a level to be broken because you know that highs and lows are buyers or sellers. So we know that highs are sellers and lows are buyers, right? So here we saw low day, buyer stepped in, and then the market reversed. Well, you always want to look for the fair value gap that's breaking levels. In this case, this fair value gap was the one that broke the level. This candle here broke through low a day and closed below it on the next one, right? So that fair value gap would be valid. But people get confused as to when do I start marking the, fib retracement? Well, if you're on a downside move, you simply go from when the move started, the top of the move, to when the move started retracing. We broke levels there. This fair value gap became valid, knowing that this level was broken. So we would go to the first green candle on the retracement. It's not going to be perfect, but that's where, initially you'd want to get in. You might have another entry there or there as well, right? And that's where your trade would be. You're breaking lows, you have the fib, you know which fair value gap to pick. It's that one. It validates it, gives you more confidence, bang, and then you can target lows like that, set your risk to reward, and this is your trade there. Bang, and then obviously TPO smash, and then like I always say, don't forget the good days. You don't know when it's just continue forever. So it's like a fib is really important when you're looking for the proper fair value gap. It just gives you extra confidence and also allows you to find the proper fair value gap. Let's look for an upside trade to give you an example on that. Let's find one where we break high of day. Okay, this one's good here, right? So most people would ask, we were ranging or we went down, failed to go lower. We ended up inversing this fair value gap here, creating a new one. And then obviously, this is how you find your proper fair value gap, but also by using the fib. Bang, right? This is where equilibrium's at. From the start of the move here, this is where the volume stepped in to the middle there. Is this a valid fair value gap breaking highs around equilibrium? Yes, this is where you'd want to enter. It's a good trade. All you simply do is target high a day. I'm not sure if we had any previous highs before that. I'm sure this was all-time highs at the time. So you would just simply target high a day, which is a good enough risk to reward there in itself. Bang. And that's really all you're looking for. Of course, this trade was later in the day, and it was just kind of like a flash move. I don't think I would have taken this, but this is how you use the fib. This is more about the fib just to show you, like, okay, the 0.5 is there, lines up with the level being broken. This is where sellers stepped at. This is where the volume's at. This is where orders are going to get filled. Fair value gap, equilibrium, bang. It's nothing too crazy, but it does help you in your trading. And that over time, you will start to, be able to read this by yourself without having to use the fib tool. Indicators don't necessarily help you, but they are tools. They're kind of like training wheels. And then after a while, you really won't even find yourself using them. But yeah, it's how you use a fib retracement on the up moves and the downside moves. On the upside moves, just as a reminder, you want to start from the bottom of the move to the top of the move, and you will know when you get your first red candle retracing after levels being broken. And then same thing to the downside. You want to look for the fair. This is actually a perfect example. You use the fib from the top of the move to the bottom of the move. You'll find which fair value gap you're supposed to be using. Boom, lines up with breaking the low, and this is where you'd want to be entering, right? This might have been like a trade I would have stopped out on for sure, just because I follow my rules. Where is it going? There we go. I follow my rules, and when it hits my stop, I stop out, regardless of it going my way. And the only reason I do that is because if I build a habit of holding my trade simply because it's barely above my stop loss, and it does vary. Like if I'm down 1 to 2%, of course I'm gonna hold a little bit longer because my risk isn't as much. But if I'm down like 10, 20, 30%, if I'm playing 0 DTs, I'm obviously gonna stop out of the trade. It just depends on how I'm trading it. But you can see that this was the proper fair value gap. Inevitably, it did go lower, created lower lows, and continued down to the trade. Someone out there might have held it, whatever. But this is about the fib and finding the proper fair value gap. And that's how you do it. Bang. Catch you guys on the next one. Doses.